Okay.
All right. Now use something else then. Hey, what's up, everyone? Just Friday afternoon. Market's about to be closed over here, so going to talk about what's going on with them. So starting off with the S&P 500, you can see we're looking for retracement setup. Let me put this thing on. There we go. So we were looking for a retracement setup coming along over here. I'll tell you what, let me do something smaller. There we go. So we were looking for the retracement coming out here, never hit the profit 38, didn't hit the 50, so it is still a valid trade. And the market's pretty much going up for S&P 500, ended up flat today for it. There wasn't a whole lot looking into it that we were looking for today. I don't believe, because I think everything had pretty much got. Oh, I'm sorry. There was a what's it called? The expanding triangle trade, and I think I already took it off, unfortunately. We did have yesterday, which I missed, we did have a shrinking triangle right there. So it breaks above it right here. And then the target, when it breaks above it right there or closes above it, it's up there, it didn't hit it, and then it comes back to the other side to get long right there and then get out close to the entrance, which would have been a slight gain. So that was one right there. The expanding one, I don't remember exactly where. This is it right here. Yeah, this is it right here. The expanding. I think that's it. No, that was not it. But anyways, the expanding one went and got filled today. It went up over there. I mean, when it went up there, it got filled. Was it on a 15-minute chart? I don't think it's on a 15-minute chart. No, because that wouldn't happen. That wouldn't happen. That'd be on a 5-minute chart. 1, 2, 3, 4. Nope. 1, 2, 3, 4. Nope. I don't remember where it is though. 1, 2, 1, 2, 3, 4. That would have been that one right there. But anyways, what we do have though is we do have a one thing I was looking at is trying to figure out how to make the trade even better, and we'll just go over to the Russell 2000. There's not a whole lot going on over here with this one with the S&P 500. You see today it just straight up extension day. Once it hit up in the target area for the extension high, that was it. It sold off, and now it's pushing back up to it as the close of the day happens. But that was basically it for today for it. We do have, if we're going to use this low, we do have another potential retracement trade setup going into Monday. You see, using that swing low, that swing high, pricing back to 50. We need to go up, hit the 1.46. If it does, then we'll just change that to retracement setup, and we'll look for it to coming back over there. But that's all we have going into Thanksgiving week next week, which is normally a lot less volume since a lot of people take off the whole week for trading, and Thursday and Friday are closed anyways. So this is one. This is a trade from yesterday. You can see it's got to go looking for 2 ways based upon this. I did leave the one up here, but it's still looking for. This is up 5-minute chart. Yeah, the 5-minute chart right here. So we were still looking at 200% up there to get hit, and then 200% down to here to get hit, and neither of them have right there. So it's been a strong day down here in the Russell. It's up over 1.34% today for the market. It looks like it's closing up on the high side for the highs of the day for right there. Compared to yesterday, just inside day. You can see the highs and lows are inside of the previous day, so they have an inside day. But anyways, what I want to show is started to see if there's a better way to get out of these trades, and of course went back over to the pitchforks. And so if these pitchforks end up working out, then we'll get rid of using the Fibonacci extensions and also using these lines right here. And I'll show, and because all you have to look for is just the expanding triangle. There's the swing point high, swing point low, higher low right there. So then all you do is you'll get the little tool. So between the third and second point right here, you just go, I'm sorry, third and second point right here. You just see, so it's 15.2 and 46 bars. So it'll be 23 horizontally, and that's 7.6 down. So we over 23. What was that? 23. Yeah, 23. 7.6 down. We're just getting the halfway point right there. For this move right there, there's the halfway point. Now what you do is put in the 3 points using the halfway point, the swing point 3 of it, swing point 4. And then what you do is when price breaks above this right here, the green line, which is just the 50% level, you go along and take it off at the 200% level right there. So if that looks like it's going to be the new trade setup for it, then it's looking pretty good, a lot better than using the Fibonacci levels from trying to get the 200% based upon it, because what I've seen so far, it does come down and hit it. So then we had another one right here from yesterday. This 1, 2, 3, 4 right here. So we'll just do the same thing again. So between the second and third point, look at that, 37.218, so 9 bars and 18.6, 9 coming down. There we go. Here's the halfway point between those two. So you just put around the halfway point for the first one, second one, and the third one. But you'll see right here, price never came up and broke up to the upper side over here, because there's the 1, 2, 3, 4. It's expecting to go up here. So one thing I was looking at for this one is, well, all right, so we have 4 points, but what if price doesn't come up there and break above the green line? Is there something we could do when it's creating the other way? Well, one thing I'm looking at is using the number 1 point, or the 1 right there, or maybe even just 1.46. Just put that right there. Using that point, when price breaks below either that one or the 1, either one, you get short and take it down to the 200% line right there. But that's not exactly sure if that's how I'm going to utilize it right there, but it is an option to consider for it when that doesn't happen for it. So that's that. And then going into today, just use from this move right here, this line right here, broke it out, was resistance, and that's using that support, bouncing up. So for my sake, hopefully Monday, price continues to go up and hit the 200% up here. The 4-hour chart continues to move down off of the being overbought up here. And then the weekly chart still has a long way to go before it to really get out of the oversold territory from the MFI down there. And so that's basically the only steps we have that we're looking for going into Monday, especially on the 15-minute chart. The rest of them, these are just A, B, C, D moves and potential A, B, C, D. So this could be a potential right here. Potential retracement trade goes up a little bit higher, hits 1.146. Then we just put that on, and there you go. We're looking for a potential retracement setup trade for it. For the Dow Jones, same thing. So instead of using the Fibonacci ones that we're looking for the target, like for that one right there, let's see what it would look like using the pitchfork. And so there's 1, 2, swing low, swing high, swing low, low, swing higher, high. And then we just go between the 3, 4, 2, 3, second and third point right there. Did I do the second and third point? I think I did the second and third point last time, because I was looking at the first and second, but that one I found when it didn't work, so we don't use that one. So 130, so that's 65, and we'll just say 30, 65 and 30, 30 and 65 right there. There's that, that, and that. So we have this, and I see it broke above it right here. Let me take this off, right? Trend line, take that off. So it broke above it right here, and there we go, broke above it. So according to this setup, it is going to be, hold on a second. 1, 2, 3, 4. No, I'm sorry, right here. This would be it right here. This would be it. So it broke down along the downside first. So there would be the entrance right there. Right there. Put a black line on it. There's the entrance, the entry point. The exit's down here, the 200 line, and you see price came down here and hit it right there. See that? Just down, just like that. And that is the exit right there. So there's entry. Take it way down. Good little 88 tick gain in the Dow Jones off the 5-minute chart for it. And that's how it works. You're just using there's the one, swing point high, swing point lower low, swing point higher high. Then you just use the midway point between the second and third points. And then you use the third and fourth point. So halfway point between second and third point, fourth point. Those are your 3 points for your Andrews pitchfork. And then whichever way it breaks out first is from the green line. And from this one, we're looking for the downside since the fourth point is up here on the top side up there. So it broke down below it, or excuse me, closed below it. You want to close below the 50%. In fact, let me make this the thickest possible. Here we go. So it broke down below it. Actually, let me make this one thicker as well. Change the color to, we'll leave it yellow for now. In fact, I want to reverse these. No, that's fine. Because usually green means go, get in the trade when it breaks it, and then either yellow, red means caution, get out, or caution, don't get in, or something like that. But anyways, so I can reverse them if I need to. It doesn't matter. So, they worked out well right there. So that is why I'm thinking about actually utilizing this Andrews pitchfork setup rather than using the Fibonacci levels, even though so far I've seen every trade except the one I'm in right now, the Russell 2000, to work. And then we still need this one to come down here and hit as well. Although it looks like, well, today it looks like it's going to be about a flat day as well here in the Dow Jones. Going to oil. Oil had a big move, nice move up today, almost 4%. And so when it gets up in this area, we'll be looking for a retracement trade. Small profit potential is around 9 or so ticks. So, not a great gain, but they add up over time. And so that's basically it today in oil. I mean, compared to yesterday, where we had that huge move down yesterday, where it went down almost 6%. Today, it's up in total 4.5% from its low today to the high. So didn't quite make up all of yesterday, but made up a good chunk of it. So some 2 days of huge swings in the oil market. So we're just waiting for them to get up over there. But unfortunately for the trade steps I look for, there weren't. Well, excuse me, there was one, but this one happened at over the real early trading session. It's just the triangle trade. Right there to right there, at that point, there's swing point high, swing point low. We don't have swing point lower high, swing point higher low. So all that you do for this one right here is, once you get that fourth point established, which I'm not sure when this would have shown up because these semaphores, they happen after the fact. As you can see, let me show you like right here. See, it's going up all the way right here. So, if this goes down probably lower, this will probably be a point, but you don't know until it moves away some. It obviously doesn't happen live, up to the minute of when the market's moving for the current candle. It paints it in the past. So it's good making these third points, but in this fourth point, you may have to kind of guess around a little bit for it, and sometimes they're not very accurate. Like this one, I don't think that this is accurate. Look, we have just a couple candles over, we have a lower low right there. So personally, I think it should have been right there. If you move it right there, it still ends up being about the same thing. It doesn't really matter. But yeah. So anyways, So it didn't close lower, and then we finally have the close low right here. So the way the setup works is when it closes to the downside or the upside, but this time it's the downside, the profit target is, no, that's not it. Profit target is the same, it's the 1.146 level down here. So the maximum profit potential from the entry point was around 23 ticks, but price goes up, reverses the other way, and hits the top side of the triangle channel right there. You get in. I'll put my entry probably been slightly below it because I've seen it get pretty close without hitting it. So if I dig in this trade, it would have shorted right there. And then you just take it out close to where the entry was. You don't take it all the way back down to the entry because I have seen it not get down there, but enough to get you in profit potential. So say for instance, you got in right there and you got in right there. You take it to about right there as your exit. You're losing 5 ticks, but in that trade right here, you're up 23. So in total, you get 18 ticks, and you could even up here for the second entry go in for 2 if you want to, kind of like the martingale strategy that I use for the retracement trade. So that is crude oil. There's no really, I don't have any predictions as far as where I think it's going next week based upon the trade sets, just because this huge down day down, and I had a big move back up to it. So we're just waiting for these retracements to come through. We can see, let's see on that 1 hour chart, it's in extreme over bought territory, just coming off from yesterday being in oversold territory. So I look for a retracement next week. It's a 4 hour chart, coming off from just being slightly oversold. Daily, nothing. Weekly, oh, look at the weekly. The weekly is completely in oversold territory. So, between now and the rest of the year, eventually start looking for a pop-up in price. We're in about the mid-70s, 75, 70, well, about 76 right now. So, yeah, between now and the end of the year, I wouldn't be surprised to see this thing pop back up, back into the mid-80s, maybe even push the 90s, depending what happens in the political front. Because look at this right here, although we don't have one. Let's see, do we have a daily? Can we get some daily semaphores? Okay, we do have one right here. So we have this. So we have, didn't quite come back down to it. It would have been a retracement trade setup, but it didn't came close, but didn't come back down. And then we don't have anything else down there. You can see it's got support around the 6.18 line. So if this is going to be an A, B, C, D move up here, the target would be 94.05 for that. But there's a big retracement trade. See that? Going down right here. One right here. It'd be a big trade. When it's this big, this one I'd use options on the for crude oil, which I think you do. Wait, can you do that? IWM, QQQ, CL. No, I don't think you can. Can you? I don't know. But this is too rich for my blood. I wouldn't get in right here unless price came up all the way right here and hadn't gotten out yet. Because you see, you get in right there to down there, 126 ticks. But if it goes up and hits here, looking down here, 134. If the price keeps on going up over here, potential is around 220. So price did continue to rise up, hit the 50, never hit 38, hit the 61, never hit the 50, kept going up, hit the 78.6. Then I would look to get short right here and take it down just below the 61.8. That's how that setup works. So, yeah. Nasdaq. Oh yeah, I put some notes on here. This is how I go through them. So I was making them like a little hierarchy of where the pitchfork should be. Should the pitchfork be at the last 3 points of the expansion triangle? Yeah, maybe. It's seen that work pretty well. Or the midpoint from 1 and 2, and then points 2 and 3. Or is it between, okay, well, you know what? Then I've completely messed up those last ones. Okay, well, then I was right. It was between, or the midpoint from 1 and 2, and then points 2 and 3. Or is it the midpoints between 2 and 3, and then point? Okay, well, that's what I thought it was, but apparently I found one that didn't work, so that's no. So I've been telling you all the wrong things, so goodness gracious. Something?
Oh, you done?
No. Just looking at something here real quick. So yeah, well, apparently I wasn't doing it wrong. So I was doing, so you can do, so it worked here. Like it worked perfectly right here on the Nasdaq, right there. But I did find one where it didn't work. So that must be the issue. So, all right, so it should good for be at the last 3 points. Well, maybe. So let's see what happens if we do the last 3 points. Right here, and right here. So here we go. Price broke below it, and we hit the 200%. Went to the other way and hit the 200%. Now it's using that resistance. So, not the best. Not the best setup. So it's that. So, or the midpoints from 1 and 2, and then points 2 and 3. So there's 1 and 2 here. So we'll go draw the midpoint. What's that going to be? 4.5 is, let's say, we'll just say 24, 24.25, and 31. There we go. Close enough. And then, so we use that point, and that point. So here we have 1, 2, 3, 4. And then we're looking for the break. Here comes the break down the downside right here. They broke below it. Came very close to 200 to finishing that out. So good enough for government work when it gets down that close to hit it for that. So that's how that works for that. And then going next week for the Nasdaq. You can see that today was just another extension day right here. See, right off the 1.46 level right there. And that was the highs of the day. It was the resistance. And then, let's see here, 1, 2. Well, we do have an expanded triangle trade right here as well. There, right there, there, and right there. 1, 2, 3, 4. So just need to figure out which one I'm looking at for this. Should be at the last 3 triangle points. Let's see what that looks like. That's the case. We're in a long setup right there with the target up here. Or should it be 1 and 2 and midpoint? So that to that. So 16 points and let's say 18 bars. Right, so there we go right here, there, and right here. So 1, 2, 3, 4. Price came up, closed above it, never hit the 200, and then it's found some support down here. So the target would be right up there for that. So that's how that works. You don't take this one like when it breaks down up here because the 4 point hasn't been confirmed yet. Because there's your swing point high, swing point low, higher high, lower low. There you have the expanded triangle. Show you there, right there, and right there for that. And also would have been long right there if you're using that the trend line break that I had been looking at. Lastly, Bitcoin. I went back up some today. We're just looking for some retracement trades here in the daily chart for it, and still with the price for the 5-way Elliott move up here at a little over $78,000. Looks like the MFI just coming off, kissing off the overbought area, so could see a little bit of pullback in the market. Not guaranteed, but could. Weekly chart, nothing really there. Nothing going on over here. For Then we'll lower down here. Yeah, so not a whole lot going on there. But anyways, that's the weekend recording for it. Take care and have a good Thanksgiving next week. Thanks.